Here's what's fueling the massive move in QS, and what to be watchful for. QuantumScape has become one of the more intriguing tickers on the market again, surging with a mix of short interest pressure, options activity, and technical momentum. As of Friday, the stock is trading in the 1464, having rallied sharply in recent weeks. While many traders are scratching their heads at the velocity of the move, a closer look at the options chain, short interest, and technical setup offers some compelling insights into what might be unfolding beneath the surface, and where savvy traders may want to look for the next best entry. $50 level is the first 38.2% Fibonacci retracement level from the massive collapse off the all-time highs. And yes, price would need to climb over 238% to reach it from current levels. Wild, right? But this is actually what makes QS one of the most volatile and explosive setups on the market when it starts to wake up. QS announced integration of its Cobra ceramic separator into baseline cell production. This tech boosts manufacturing throughput 25 times compared to the old Raptor method, which is a game changer for scaling, shorter heat treatment cycles, smaller equipment footprints. Let's start with the elephant in the room, short interest. While 13% of the float being shorted might not sound like a massive number on paper, it's important to recognize that not all short squeezes are created equal. It's not just the raw short interest that triggers an explosive move. It's the float liquidity, the size of the public float, and the rate of buying pressure that really matters. In the case of QS, the float is relatively tight, meaning that even moderate amounts of buying, particularly from call option flow, can force market makers and funds into a frenzy of hedging, which leads to the kind of vertical action we've just witnessed. Stock surged 68% in June and shot up another 150% in early July, trading well above its previous pivot levels due to the tech news plus heavy volume. 50 M share sessions. With over 13% of float shorted, squeezes are intensifying moves. If you'd like to catch moves like this in real time with us for free, grab a 7-day free trial for a limited time in the description below. Check out the insane money flow in this chart. That's not mum and pop, that's institutional flow. There's a clear bet on further upside above $12 into mid-August. Buyers are aggressively building long call positions, which is putting upward pressure on the stock via delta hedging, cards stacked against any dip. The August 15 options chain gives us further clarity. Calls have seen major inflows, with notable volume and open interest increases at the $9, $10, and $13 strikes. The $13 call in particular saw over 2,900 contracts traded, with a net open interest gain of 1,500, which is significant for a stock with this type of volatility profile. The $15 and $16 strikes also saw big inflows, suggesting traders are positioning for a continued move higher or a blow-off top. Implied volatility is sitting in the 130 to 160% range, and in some strikes even higher, showing that premiums are rich and the market is expecting fireworks over the next month. On the flip side, the put side of the chain does show some activity, but it's nowhere near as aggressive. While there's open interest building at the $10 to $14 strikes, the put delta and IV are less extreme. This signals hedging behavior rather than outright bearish conviction. If anything, some traders are likely protecting gains or preparing for a pullback after such a strong run. Technically, QS is extended. The stock is currently riding the upper Bollinger Band on the daily chart, a sign of extreme momentum, but also a warning of potential exhaustion. The RSI is climbing toward overbought territory, and MACD is showing early signs of bearish divergence, meaning price is still rising, but momentum is beginning to fade. None of these are sell signals on their own, but they do caution against blindly chasing. People are buying puts, not heavily, but enough that they're hedging their long stock or call exposure. While calls dominate, the presence of puts indicates some caution, possibly lock in profits or prepare for volatility. QS's flow suggests continued bullish moves, but be cautious. High IV means a rest or slight pullback could hurt the value of long options. If you're riding calls, consider rolling early or hedging with tight puts. And watch the $12 to $15 zone for early signs of volatility fade or profit-taking. $15.50 zone. This region has acted as resistance in the past and now aligns with psychological round number resistance and a likely gamma wall from call positioning. Should the stock spike into that area, it may provide an opportunity for profit-taking or a brief pause in the trend. If instead QS starts to pull back, the question becomes, where's the dip worth buying? From a technical standpoint, a healthy first pullback could land in the $11 to $11.50 range. That would tag the rising 8-day EMA and allow the price to cool without breaking structure. If selling pressure intensifies, a more significant level is around $9.80 to $10. That zone aligns with previous breakout levels, open interest clusters on the call side, and the 21-day EMA. Bulls will want to see buyers step in here decisively, as a break below $9.50 could open the door for a retest of $8.25 or even $7.50. But as long as QS holds above $9.75, this move still has fuel. The high IV on the call side means a lot of delta hedging is likely supporting price. If volatility compresses, some of that support could unwind. But for now, the options market appears to be working in bulls' favor. In summary, QuantumScape's recent price action has all the markings of a technical squeeze supported by call-heavy options flow and a relatively small float. Traders should be cautious chasing at current levels, but sharp pullbacks into the $10 to $11.50 zone may offer a high-risk, high-reward entry if volume remains strong and structure holds. Just keep in mind, with IV this high, options premiums are elevated and timing becomes critical. Whether you're long a stock or playing through calls, make sure you've got a plan, because this story is just heating up.